But we have with us Harshad Patwardhan, who is joining us from Edelweiss Mutual Fund to talk more about the mid-cap outperformance. Harshad, thanks very much for joining us. We got a very good presentation from you around it. But what's the broad hypothesis you're making that you feel the next 2-3 years actually outperformance could come from mid-caps?
Sure. Good afternoon, Ajay, and good afternoon to all your audience. So 2-3 reasons. Firstly, and before I get into next few years, we should remember that 2018 and 2019 were the 2 years when mid-caps and small caps massively underperformed large caps. I think that is the reference point that we should not forget. In fact, if you look at 20 years history, 18-19 were the worst years on records for mid-cap underperformance compared to large caps. If you go back to 18-19, you will realize that the rally, even in the large cap, was very, very narrow rally. And the reason for that was that if you look at the economic backdrop and corporate backdrop of that period, and I'm referring to now almost 6-7 years prior to 2020, prior to COVID, the economy was actually decelerating. There were very few businesses which were actually doing well in an absolute sense, and that reflected in the markets. We believe that the economy has bottomed out. April, May, June quarter of last year, as you know, was the worst quarter on record, 25% contraction. Since then, the economic recovery has begun. And the economic recovery is not narrow, but it's fairly broad-based. And when I say broad-based, I'm limiting myself to the listed company universe, which is where we invest, right? SMEs, I know there is a lot of pain. I'm referring to the listed universe. The recovery is broad-based. If you look at the sectors that the government is focusing on, manufacturing, infrastructure, there are plenty of segments of the market which are dominated by mid-caps and small caps, and those are the segments which actually will benefit from this broad-based recovery. So essentially 2 reasons. 18-19 were very bad for mid-caps and small caps, and there will be an adjustment for that. Secondly, broad-based recovery. And thirdly, if you look at the history of 20 years for which data is available between mid-cap and large cap, generally you will find more frequently by a higher margin, mid-caps tend to do better than large caps. And I think we are back to those normal conditions over the next few years.
Harshad, you have looked into a lot of other parameters as well, apart from these which you mentioned. On the data front, how are the earnings potential looking? Just for example, the portfolio which you are managing from the mid-cap and the small cap side, what kind of earning picture, even if you stress test your hypothesis, does it throw up for FY22-23? What kind of conversations are you having with managements of the portfolio companies from the mid-cap and small cap basket? If you could share some data or insights there.
Sure. So, first a caveat, clearly what we are going through right now, Ajay, that is bound to lead to earnings cuts, estimate cuts for certain businesses, not all businesses, but certainly, several business areas. So that is a caveat I want to say. So, but if you look at the end of April, when we speak to the businesses that we own in the mid-cap and small cap space, 20% plus kind of compounded earnings growth is possible over the next 2 years. And again, people are surprised when we talk of that kind of earnings growth, but we should remember that there is a base effect also. So last couple of years were very, very tough. This year, of course, is tough because of economic contraction. But even before that, as I mentioned, the earnings growth has been very tepid. Just to give you an example, I mean, a similar example is not available for mid-cap and small-cap universe. But if you look at Nifty, 7 years in the run-up to FY20, Nifty earnings growth itself was 2%. So we are transitioning from a very low earnings growth period to a relatively high earnings growth period. And that is reflected for our portfolios also.
Right. Let's shift focus and talk about the ownership pattern of the mid-cap, small-cap universe. Apart from companies such as yours, which I must congratulate, doing a phenomenal job as far as your mid-cap and small-cap fund is concerned. It's got pretty famous among distributors and HNI investors. That's the feedback I've gathered. But apart from mid-cap funds, it's the PMS universe, HNI and retail which is more active. Generally, there's a view that FPIs stay away. But your hypothesis says that that's a myth. Talk to us about the ownership patterns as far as the small cap and mid cap universe are usually concerned, and your observations there.
Sure. So I'm glad, Ajay, you brought this topic, because this is something where there is a lot of misconception. So my discussion with distributors over the last 13, 14 years, there is somehow a misconception that foreigners, FPIs or FIIs, do not invest in mid-cap companies. And so we actually present the data. It's not an hypothesis, it's a fact that if you look at December end data, you will realize that FPIs put together own actually, if I recall correctly, 17.4% of the Midcap 100 index, right? And if I recall correctly, their investment actually is bigger than that for domestic institutions. So it's a misconception that foreigners do not invest in Midcap funds. But yes, I mean, the general perception is that, is generally retail or PMS products who invest more in that. So that is another important point. So when FII money comes into India, like last year was a very good year from a FII investment perspective. Last quarter of last year was one of the record quarters. So not that all that money goes into only large caps. Some of it also comes to quality mid caps and small caps.
All right. I was just looking at another information that over the long periods of time, if one really looks at the data points, beyond 3-5 years, the outperformance from the mid-cap, small-cap universe turns out to be big than the large-cap universe. And obviously, because of the growth these companies are in. Large-cap universe usually are mature companies, mid-cap, small-cap are high growth, though there are some large caps also which move very fast, but that's an individual case-to-case basis. If we were to talk about the growth and what can be reflected in the earnings over returns over the 10-15 year plus kind of a horizon, what is your research throwing up? Because we are also talking about the universe of investors and new gen investors coming into the market. They are young, 35-45 year bracket. Some of them are wanting to take long-term view. In fact, that's the right view. So what should they be keeping in mind when approaching mid-caps in terms of returns?
Sure. So before I talk about returns, let me, spend maybe 30-40 seconds on why quality mid-caps tend to outperform quality large caps. So one of the fundamental reasons for that is mid-caps and small caps, typically are under-researched. So if you look at the biggest companies in India by market cap, you will find that more number of analysts cover those companies compared to their counterparts, let's say even in US, right, in the IT or banking space. However, as you go down the market cap curve, the number of analysts covering it drops significantly. And that's where an opportunity lies for people like us who actually can, pick stocks which are currently not covered or, under-researched on the street. So our investors benefit both from underlying growth that you alluded to, but also from potential re-rating. So that is, one of the key reasons why a portfolio of quality mid-caps tends to outperform a portfolio of quality large caps over long periods of time. There are different ways of looking at it. As I said, over the last 20 years, more often mid-caps have outperformed large caps. In terms of, relative returns over 15, 20 years, there is a meaningful alpha that you will have owning a mid-cap index versus large cap index. Mind you, this analysis is at an index level. You would have noticed that many quality good mid-cap funds have managed to outperform their benchmark, whereas not many large cap funds have managed to outperform their benchmark. So if you actually do this exercise at the fund level, the extent of outperformance is even higher. My favorite way of looking at returns, frankly, is rolling returns. That really tells you, the base probability. And if you do that analysis on a 3-year rolling return basis or a 5-year rolling return basis, because as you rightly said, if you are investing in equity, particularly in mid caps and small caps, you have to have time horizons of that order. You will notice that roughly 2/3 of the time on a rolling return basis, mid cap index has outperformed large cap index. And if you extend that to 5 years, almost 4/5, 80%, 77-78% of the times, mid-cap index has outperformed large cap index. And again, that is at the index level. At the fund level, it is much more. Which is why I think it makes sense that if you do have a long-term time horizon and if you have appetite for volatility, stomach for volatility, then chances are that you will make more money investing in mid caps and small caps than large caps.
Right. Harshad, there's also a view, there's a tendency among mid caps. Sure, via the fund route, there is a way to play it, but there's also a lot of DIY investing happening in the mid cap side. And, for the thrill of it, or to keep yourself occupied, whatever you may call it, or the sheer passion of finding multi-baggers in the small cap, mid cap universe. But as a professional who's been looking at this space for a long time, managing 2 mid cap, small cap funds, what would your advice be to that universe of investors who want to do DIY? Because a lot of mid cap, small cap blow up as well, and that's a big risk in the smaller company universe. So how should identification of potential growth winners be done? If your message to the viewers or the young investor that you're getting in their hands dirty in this space.
Sure, I think it's a very topical question because one of the things that is very, very apparent over the course of last 1 year and again last couple of months even more so, that the percentage of non-institutional investors has significantly gone up if you look at the exchange data, and absolutely that's what is happening, and to an extent that's what explains the crazy moves in stocks that you see these days, right? So there is a lot of DIY investing that is happening. In my experience, yes, there are some people who manage to do it very, very well. There are, those set of people, but I think majority of the people will not be able to do it consistently. I think that's what history suggests. What I have discovered over the course of last 13 years that, we have been managing our mid-cap mandate is that in mid-cap and small-cap investing, when I say that I'm talking about businesses which are under-researched, bottom-up stock picking is absolutely important, and you have to do your homework. Just because somebody tells you to buy something, I don't think that's a good idea. A few times you may make money, but if you have to consistently perform in this space, then there is absolutely no substitute for doing your own research. If you have the time, so if you have the time and inclination and the requisite skills, by all means, do it yourself. But what I've found is that majority of the people either do not have the skills, nor the inclination, or the time for sure to do this. And therefore, I think vehicle like a mutual fund is probably a good vehicle to take an exposure to this very, very volatile asset class.
Right. One last question, I'd like to talk about your funds as well. I was just looking at the potential earnings growth of both your funds. One is showing 26%, the small cap fund, which has got names like Dixon, JK, Persistent, Praj, Deepak Nitrates, Laurus, some of the outperforming stocks. And if one were to talk about your mid-cap end of the fund, then the earnings growth is again 21%. One last word about your funds. These are 2 funds having very high quality names, good 20 to 30%, 25% kind of earnings projected for 23 I'm talking about. But let me play devil's advocate. Some of these names have done phenomenally well as well. Your fund may have benefited from it as well. What is your take on valuations versus the earnings growth which lie ahead? Does it still have margin of safety, or the valuations are safe?
So, Ajay, as you know, I will not be able to comment anything about individual stocks. But let me tell you that, clearly we have benefited from some of these moves. But we manage our portfolio in a very, very active manner. So at any point of time, we are investing the incremental rupee that comes in. We basically ask ourselves as to where is the expected return the highest, right? So that is the model that we use. And when you are talking about earnings growth, you should also talk about the valuations, underlying valuations. So the best measure to look at these funds, or for that matter stocks, is not earnings growth only, but something like PEG. So price to earnings growth ratio. And on that basis, if you see, our portfolios are somewhere between 0.6 to 0.7, which basically means that the valuations may be high because, there is nothing in quality which is available cheap right now. But the earnings growth more than offsets. So what we do is we are managing the portfolios in a very active manner. And the incremental rupee basically goes into stocks, which offer probably the highest potential from this point onwards. So therefore, you will see the weightages of different stocks in the portfolio keep changing. over a period of time.
Right. All right, Harshad, thanks so much for joining us. It was a great chat. I'm sure viewers would have benefited. Those who are very, adept at operating in the mid-cap and the small-cap, it's good. But many of the new investors which are looking at it eagerly because of the big outperformance it offers, I think these two funds of Edel MF are a great way to navigate that space. Let's take a short break. Thanks very much for your time, Harshad. After this break, we'll put the spotlight on some of the newsmakers and big movers of the day. People changes does spark big moves, and Godrej Consumer is one such stock which is benefiting from that, over 21% gain. We'll analyze it and much more news after this very shortly.